Hey guys, welcome back. In today's video, we are talking about how something is brewing, the unfair shorts, the system breaking, and many more in this video. So firstly, we're taking a look at this. So starting off today, we had an extremely large off-exchange volume, again, 66.15% for AMC. And when you take a look at in terms of the price decline we have today of negative 7.58%. Now, bear in mind, the overall market did, of course, sell off. We saw Nvidia actually drop close to 10% today. But when we look at AMC, we have to understand that it's obviously different. AMC is obviously held by retail investors. And so we don't have the correlation like we do with the movement of NASDAQ, with the movement of S&P, or at least to that major scale. And so when we do see the price drop, obviously they're trying to link it with the overall market, but it's also because we are seeing how the off exchange is obviously going on, how the buy pressure is being moved away, and hence why, despite people are of course viewing AMC as a discount, despite people buying into AMC like we've seen in the OBV, we are still seeing the price decline because the buy pressure actually isn't hitting the market. You can see Stefan says here, big unjustified drops at low volumes typically bodes well that something good is about to happen. Now, what we're referring to is obviously in the past when we have seen these drops happening on zero volume, on zero news, especially actually on the back of good news of earnings, is that because they are worried about something. It's because they need to prepare the settings, they need to suppress it as much as they can. And so when that something good is announced, then they don't have that same effect as it would if AMC were to stay at its same price. This is something that we've seen them obviously do in the past. Now, does this mean 100% is going to be the case? No, it's not. But like we talked about, when we use past data, when we look at what has happened in the past, this is obviously what has been happening. Now, like I said, it is of course, we talked about AMC off the back of good news. We've talked about the earnings. We talked about where AMC is at. One of our previous videos, we talked about a potential merger of AMC, especially understanding the business structures of AMC now in terms of the strategies that they are taking, that they are using. Like I said, we could be looking at a potential merger as well. And so we have so many things right now that is showing how AMC could be announcing a massive catalyst that could obviously take us up. But I don't want to shift the focus on just fully about AMC because there's multiple ways to affect the short sellers. Firstly, you can see this. Can you answer a question for me? Why is it that shorts on the London Stock Exchange must file their positions publicly if it's over 0.5% of the float of an issuer, yet shorts in our market have zero filing requirement? And you can see, and when any reporting requirements are about to go into effect, they delayed them for a year plus. So we talked about how obviously good news with AMC is obviously going to have an effect, but there are also other news, which is, these things that they have on shorts, the regulations, the news, kind of the more limitations on shorts. Now, unfortunately, obviously with the delay of the short reporting, we obviously see that shorts get away with this, that shorts don't have to report their position. But we talked about in terms of the effect that people has had. Obviously, we've seen a lot of attention. I'm still continuously seeing people talk about this. I'm still continuously seeing, people are making a big deal out of this, and like we should, because this is obviously very important. But it's also talk about how the firms that are, of course, and you can see there isn't as much talks about naked shorts in the Europe region as opposed to the US region, and that's because of these sets of rules. And so to understand whether or not these sets of rules will work, when you take a look at the places it's being implemented, clearly it's having an effect. And remember, this is very important. In the past, we've seen this. This is unusual. Citadel Securities has been charged by the SEC for abusive short selling practices. The SEC estimated that the firm marked millions of certain short sales as long sales and vice versa from 2015 to 2020. The fine, $7 million. So going back to what we said in terms of understanding why this is important, because if we were able to see that they had to report their positions publicly, then we would have been able to catch on this much sooner. You have to remember, and you have to understand, when Citadel Securities mark these positions the wrong way around, it has more benefits to them than negatives. And what it does have is the negatives for retail investors. And so if these SEC is supposed to be protecting the retail investors, obviously they should be implementing these rules. But more importantly, is also this: the fine $7 million. As you guys will recall, Citadel is obviously, saying that they've made billions of dollars, and that's what they've said for the year of 2024. And so when you take a look at how much money they can make and how little they have to pay, you can see these fines don't have an effect. But it's going back to what we talked about, one step at a time, and we want to see the limitations. And another thing is about the financial system. And now this is also an effect of why they're obviously trying to suppress AMC. So we understand in terms of good news about AMC, we talked about the regulations, the limitations of AMC. And now we're talking of shorts even. And now we're talking about kind of the situations these short end institutions are in. You can see the financial system unraveling in real time. Let's connect the dot. So firstly, we can see bank hemorrhaging $118 billion in unrealized losses. FDIC put 66 banks on the problem risk. 234 billion reverse repo. Fed scrambling to plug liquidity holes. We have also XRT ETF share count exploding, synthetic shorts unraveling, and so everything is pointed to force unwind, margin calls, and systemic collapse. The question isn't if, it's when. And so this is to take a look at what's happening, and we can obviously break it down. Firstly, banks are losing money. Yes, on their financials, they're reporting profits. But when you understand that they're reporting to be $50 billion in profit and not talk about the $118 billion they're losing, and that the net is still negative $70, $80 billion, then obviously you have a clearer understanding. And so this is the first thing you have to understand. They aren't making money just because they're showing that they've realized profits on their sheet. You have to understand what the net positions are. The second thing is obviously 234 billion reverse repo. So we're actually seeing the reverse repo, of course, continuously going down, and that itself is obviously an effect in terms of the liquidity. So both the things we've just mentioned here have got to do with liquidity. And why is that? Well, if banks are losing so much money, they won't be as opposed to lending out like they did before, because they don't have the money to do so. And for the loans they've already lent out, remember, at any point when their position gets too big, when their losses are getting too big, they obviously are able to recall these loans. So the billions of dollars they've lent out to Virtue, to Citadel, at any point, if they need the money back, they obviously recall it. And then like firms like Citadel, firms like Virtue will obviously have to cover their positions. The same with reverse repo, the easy access to liquidity, which is now falling. And that's, of course, one of the biggest problems that shorts are having, and is why they are worried. We then have the XRT ETF share count exploding. And so we talked about this. We talked about how XRT is obviously used to locate and short shares of AMC and GME. When the XRT ETF wasn't on the threshold list, we saw AMC and GME go up. And the moment it was back on the threshold list, we saw AMC and GME going down. And so you can obviously see the relationship that's of course happening there. And so just like we've mentioned, everything is pointing to force unwind, margin calls, and systemic collapses. And this is exactly like we talked about why shorts are worried, about why shorts want to suppress AMC as much as they can. Because when we do get these big unjustified drops at low volume, it means that something is about to happen, something major is about to happen. And so they're trying to soften the blow by obviously doing everything they can with suppressing AMC, suppressing GME. Now, you can see another thing, the collaterals of these shorts are falling. Just in, Nvidia closed 8.7% today, erasing $260 billion from its market cap. Now, one of the things we talked about is understanding how Nvidia is obviously used as collaterals. And to see that over $260 billion in terms of value is gone, you can understand that the value that they had originally to suppress AMC, to suppress GME are gone as well. And remember, it's a zero sums game. It's a transfer of wealth. The money that they're losing over here, the money that is all going, will inevitably go to AMC, go to GME, and that's always something that we've of course understood. As always, known as the financial advisor, do take us so make sure you do your own due diligence and research, and I'll catch you guys next time.